Well, thousands of people filed today to learn about investment opportunities. The stadium originally designed for sumo tournaments, but today the venue was reserved for individual investors hoping to cash in on the expanding stock market. Stocks and investment trusts are the main products on sale. The internet stockbrokers sponsored the investment mega event. About 4,600 individual investors came to check out the most promising financial products and companies. Presidents from the four sponsors sported Japanese jackets with slogans calling on investors to double their assets. Katsu Saito, CEO of Kabu.com Securities, says internet sales were brisk in January and February. He says now is the time to buy. Stock prices have been on the rise. Today's seminar seemed fired up by the surging market. This participant says the Abe administration's policies might be behind the surge. A woman says prices are escalating, so she's interested. One participant came with his parent. He says he came from northern Ibaraki prefecture. You ought to have an interest in investing in stocks. Investment fever is high as the stock market grows. One bookstore in Tokyo has expanded its floor space for investment-related books. Sales on this topic have risen five-fold since last year. One customer says he doesn't want to miss the boat. Other businesses are preparing for a potential influx of well-heeled customers. The Tokyo department store renovated its luxury brand section last week. A new posh consultation niche has been set up for high-end clients who want to shop at a leisurely pace. Rare items throughout the world are on offer. The head of the jewelry section at Takashimaya Company says stock price movements are a tailwind, especially for customers who have luxury needs. Individual investors are making their way back to the stock market. Competition to win over those customers is intense. The woman at a call centre explains that the more the customer trades with them, the lower the fees. The Internet Securities Company allows large volume traders to use their system for free. Expanding the client list is imperative. Going one step further, the company's sales representative promotes a new stock trading computer system. The system used by professional security brokers costs 270,000 yen. With 6 monitors, investors can follow the latest currency movements and up to 50 issues at the same time. The system makes it possible to trade on margin. Deregulation now makes it possible for individual investors to trade on credit. Even investors with as little as 3 million yen can trade up to 10 million by borrowing from a securities house. That means small initial outlays can reap big profits. On the downside, the risks are high. A wrong prediction can spell a major loss. In the past, transactions were limited to 1 per day. That restriction has been lifted, and individual investors can trade as many times as they like. Kenzo Shinmura is a large lot margin customer. He lost about 80 million yen when Lehman Brothers crashed. But this year he says he's profited big. Shinmura says his investment has grown with nearly 80 million yen in profits alone this year. Prime Minister Abe's remarks have given the Japanese people hope and given them the will to invest. So that's been important. During the interview, Shimura checks up on his investments and excuses himself to make an order. Shimoda says he sometimes trades up to 100 million yen a day. He says compared with the past, people need to really manage their risks. Profits can be wiped clean in just a single instant. So they need to fight against the temptation to risk too much when trading. Individual investors accounted for more than 30% of trading in the market last month, and trade is growing. The investment fever is on. But experts say now is also the time when people need to remain calm. Professor Hidetaka Kawakitu of Kyoto University says people who are earning off short-term margins, including day traders, are extremely active in the market. But that has its problems. These traders raise stock prices and could cause a bubble. Kawakitu says that after the Lehman shock, stock prices plummeted. Most investors sustained heavy losses. Unless Japan teaches its investors to hold on to stocks over a 2 or 3 year term, the stock surge over the past few months could end up being just temporary.
Assets moving from savings to investment may be favorable to stimulating the economy. Perhaps so, yet I tend to take a conservative view since there are always ups and downs. How do our viewers think?